YouTube. Hope everybody's having a great day. As I always say, we're back again with another stocks video. This time I'm going to be talking about AMC. I'm very bullish on AMC. Definitely a believer of the MOASS, but at the same time, if you don't know what the MOASS is, it's the mother of all short squeezes. But at the same time, I'm going to be talking about negative beta today. The understanding of negative beta. Not everybody seems to understand negative beta. I'm right here on Fidelity because I have a Fidelity account. Price performance 52-week is over 800%. I want to actually talk about negative beta because AMC has a negative beta, right? Let me make sure I find it right here. Here it is. According to Fidelity, AMC has a negative beta of -5. According to Bloomberg, if I remember correctly, it had a negative beta of over -10. I think it had it like at -11 or 12. And Bloomberg has something called the adjusted beta. And the adjusted beta, they typically talk about adjusted beta from my understanding. Let me know if I'm correct. When they mean what they feel like is going to be the trajectory of this stock going forward as well. So it's like a quote-unquote future outlook into what the beta will be as well, what the relationship with the market is going to be. So they have a negative beta also as a future trajectory for AMC when it comes to the adjusted beta on the Bloomberg terminal. But the raw beta, which is this type of beta right here, they have it at about -11. Here's -5, which is good. I'm going to explain why it's actually good when it comes to this. Excuse me, I just say. But at the same time, I'm going to explain why, because negative beta in this type of way is actually a historic trend. It doesn't mean it's going to be doing this going forward. That's not what it means. It's a historic trend of what the stock typically does in relation to the market. However, it's good to see the historic trend because it gives you an outlook of what possibly, right, could actually happen with the stock going forward. There's been times where AMC is going up and the general market is going down. There's been times where AMC is going up and the general market is actually going up. So AMC, truly, when you look at it, it tends to actually go by its own way. The same with GME. It really tends to go by its own way, so it doesn't get very heavily affected and having a relationship just stuck to one thing. Like it only goes up when the market goes up. No, it's gone up when the market goes down as well. But the negative beta truly means this: a beta less than 0, which would indicate an inverse relation to the market. It's possible, but highly unlikely. Some investors argue that gold and gold stocks should have negative betas because they tend to do better when the stock market declines. So usually when they talk about this, they're trying to talk about the overall general stock market. Of course, there's ETFs that have the total stock market as a fund. But a lot of people like to look at SPY and the S&P 500 because it really talks about the top 500 companies, right? So that's the best overall outlook, especially the Dow Jones as well, right? So usually when you see SPY going down, that's a general way of looking at the general market. And if you see this inverse relation that we're talking about, AMC would do the opposite, especially during a market correction, which a lot of people think would happen, not because of the mother of all short squeezes, but inevitably the mother of all short squeezes would be a symptom of the overall market condition, given what's actually happening with reverse repos, the shortage of collateral, the other big issues when it comes to actually having to have this drainage of liquidity. You could argue with some other people about if they're really printing money or not, or they're just putting it out of thin air, right? But at the end of the day, they're doing a drainage of liquidity through the reverse repo market for collateral. And there is definitely a shortage of collateral because you've seen these warning signs and symptoms that actually happens with how the reverse repo market is actually behaving in a way collateral is actually needed for even hedge funds. And you look at it, money market funds are the ones that are actually using a reverse repo, but they're using this to get collateral as a last resort because usually the clients for these people, which money market funds are a liability for the banks, clients of these people typically are for these banks. The clients are hedge funds. So you understand the type of connection. It's interesting to see. And especially when you've seen these margin requirements go higher and higher for stocks like AMC and GME. Very interesting, right? A beta less than 0, which would indicate an inverse relation to the market. It's possible, but highly unlikely. Some investors argue that gold and gold stocks should have negative betas. So if you're looking to get in gold because you feel like, let's say the stock market's going to do a very, very, very heavy correction, maybe you want to call it a crash, and you feel like you want something that has an inverse relationship to it so that you could actually go up, right? Gain value, gain a higher percentage as the stock market actually declines, you would go with a stock that has a negative beta. But my understanding when it comes to AMC is like, we even see that AMC goes up when the stock market goes up. We see that still has that negative beta as a historic trend of what it tends to do most of the time. So it's a good thing to see that's actually negative, given the fact that that would indicate during a market correction, what would AMC tend to do? Actually go up. Now, here's the good thing. You should actually look at the Volkswagen squeeze not because it's exactly the same scenario, but I would like to point to you that when this happened, this was actually around the same time in 2008 when the market was at its lowest points from that global financial crisis. And what happened with Volkswagen? Volkswagen went down and down and down as well. Until, of course, the whole scenario between Porsche and the short sellers that were actually borrowing the stock. Then we find out Porsche has over 70% ownership. So we really realized something is happening here. And the shorts got squeezed heavy. But before it actually happened, we had a very, very, very heavy decline from over here to way over here. So let's say you're looking at it like, okay, the stock market is crashing, right? Which did happen in 2008, 07. Volkswagen was actually going down heavy too. Heavy until shorts started covering, because at the end of the day, this was going to happen, given what was happening with the relationship with Porsche and short sellers having borrowed so much. So even in the scenario where AMC is actually going down as well, but people are still holding the majority of the float, and shorts end up having to cover because they're liquidated in their positions on other stocks. You might see AMC going down heavy during a market correction, right? Until it actually starts spiking like crazy, because these shorts have to cover for this, because they're starting to get margin calls in other positions. They might actually have margin for long positions. You're still going to have to cover for these positions right here. Very interesting, right? And that's why I wanted to paint this scenario to understand negative beta is a historic trend. It's not what happens with the stock automatically going into the future, but the Bloomberg terminal does have adjusted beta, which is still a negative beta for AMC, and that tends to be what they feel like is going to keep happening in the future for the projection of how the stock is going to behave in relation to the market. They feel like it's still going to be doing the inverse. So that's very interesting to note, given the fact that I'm still bullish on AMC and I feel like it's going to go to over 100. Actually, around August, I feel like I might actually get to that point because of how the chart is looking. And we actually are looking at a parabolic arc, which is a very rare scenario. I might be talking about it in another video. And I feel like we're definitely actually, if you look at it closely, it does have an inverse head and shoulders. But you got to look at another period of this chart. The chart is a bit too constrained right here. So it's very interesting to me, all these. I just wanted to talk about the negative beta on this point. We will be talking about other points of AMC in other videos. But I'm bullish. And I'm definitely bullish, for sure, on GME as well.